Happy Friday, traders. It's Friday, August 1st, 2014, 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. First Friday of the month, non-farm payrolls Friday. Important day. Let's go over what has driven the market overnight. The U.S. markets yesterday were said to be under pressure in anticipation of Fed hiking sooner than expected on a lower NFP release. Anticipated poor earnings and mixed European PMIs eroded the sentiment overnight and pushed stocks lower. Banco Espirito Santo remains in focus. DAX got down to the low print from mid-April, a long way down. July manufacturing PMI misses. Italy comes in at 51.9 versus 52.5. Spain 53.9 versus 54.5. Germany 52.4 versus 52.9. Eurozone 51.8 versus 51.9. And UK 55.4 versus 57.2. The UK has been hot for a while. US change in non-farm payrolls came out at 7:30, about a half hour ago. The number came out at 209,000 versus 231,000 expected, which is slightly worse, but the market's reaction is to shoot back up, or the ES's reaction is to shoot back up to 1925. Unemployment rate is at 6.2%. It was actually rounded up to 6.2%. It was just under, versus 6.1%. Average hourly earnings 2% versus 2.2%. Looking ahead at 8:45, just 15 minutes after the open, we have U.S. market manufacturing PMI 56.5. All times are central. That is New York minus 1 hour. At 8:55, University of Michigan confidence final is expected at 81.7. This is a medium importance number. 9 o'clock, we're expecting ISM manufacturing PMI at 56.0, prices paid at 59.0, and then construction spending at 0.5. Then we finish off the day with the 3 o'clock U.S. total auto sales, expecting 16.7 million units sold. And then after the market, Berkshire Hathaway reports on earnings. Let's look at yesterday's actions and go over what plan is formulated for today. So yesterday's action was very interesting. On a two-tick Renko, a ton of movement. Just a lot of movement, so there's just a lot of bars, more bars than I've seen in a while, which is nice to see. It forces me to move into a 4-tick Renko, possibly, but it just means that there's a lot of activity, which is nice. Essentially what we did yesterday, we opened at 1951. Remember, 1953 above is the CHVN. I'll show you that. There's your 1953 CHVN right here. This is the key high volume node, composite high volume node in the area. It was the target from above for the market falling. But we opened at 51, tested down to 47. We found buyers at 47. That was the expectation, that we would push to 40, to push lower, to find buyers, and then to start moving. That was my primary hypothesis yesterday. We would push lower, find buyers, and start moving towards 56.50 to close the gap. I expected the market would be unable to hold on to the prior day's range, so the extreme yesterday would have been 59.50. But what it did is it pushed lower to 47, found buyers to push to 51, and then it went completely sideways. So the opening type is open auction out of range. Open auction out of range implies that the market has priced in a change in value overnight, but has failed to motivate either side to reject that new area made in the Globex session. Normally, open auction out of range gives us a very clear opening swing high and low, and the break from that opening swing high and low provides us with, as I said, normally provides us with a clear indication of who is stepping in, which side the higher time frame is stepping into to push the markets in the short term. And that's what it did. It pulled back into the opening swing down to 47.50, and it pushed to 52.75. And that's all it could do. So we had a 3.5 point rotation up, then we have a 3.5 point rotation up after a 3.25 point rotation up into that 53. It was just unable to get through that CHVN. Sellers step in, take it to the other side, and then forget about it. Sound like one of the guys from The Sopranos. Forget about it. With a pullback to the mid, and then from there, all sellers all day as the market starts to unravel, unravel lower. It is unable really to muster up a good counter rotation higher. So you could see here 8 point rotation down, 4.25. So we're always looking for the mid of an impulsive rotation, like this rotation here, 5.75. Looking for the mid of that rotation, a test at the mid of that rotation, or lower for a continuation lower. Same thing here, 8 points, pulls back 4.25 points right to the mid, and we expect it to try to push lower from there since it could not take back the mid. That's just a rule of thumb. But as you watch these bars go across here and watch the market trade lower, the only time where we got an idea that that the market may be finding its buyers is right here at 6 points. Down here, 36.50. This is the low. 37 was the low of the Fed day low from June. This area has been contested by buyers, and the last time we came down here, we went to 36.25, and we popped up on an impulsive move. We put in an excess low or a secure low and continued higher to new highs. That was what happened last time. This time we got to 36.50, just one tick higher than that last low, and then we bounced around and finally broke it. And once we broke it, pulled back to it, 36.25 right here, and then continued lower. This 6 point rotation was a bit of a trick there. But still, it got its respect. We had a 6 point rotation, a pullback, and then being that this is the only big impulsive rotation up, it did break its high and traded short-term on price action as expected. But ultimately, the market just could not sustain higher prices. 8 point rotation here, so the expectation is for a lower low on that 8 point rotation, and there it is. Down to 29.25, and then the market just continued lower until it closed a former area here, and it way back in June, I think early July, a small gap area, and then it settled on the low of the day. Okay, with the point of control having moved at the end of the day, this tells us that it's likely to continue lower into the overnight session. So the key elements to take from yesterday, the point of me running through this, it's very important to kind of see the story that unfolded to form a bias. Do not, I strongly suggest against just looking at a chart and just picking up whatever the lines your chart draws for you and then drawing conclusions. It's much better to run through it just like I did, bar by bar, using your time frame. This is something we do talk about at stage 5 a lot. just run it back bar by bar and look at how the rotations were formed. It's one thing to say that it got from this price to this price. It's a completely different story to say it got from this price by doing this, going up and down and pulling higher and rotating lower, and the rotations down were much better than the rotations higher, and the sellers were in control, and it went into a short-term balance phase in here, and so on and so forth. Knowing the story helps you understand that when the market goes back up there, you know what happened in that area last time. You've already identified who the likely players are and how the market's likely to react in that region. But the key element, the bigger pieces to take away from this, is that it was completely unable to go back to 56.50 and retest that before it pushed lower. So there was just no control from buyers at the moment. So short-term to short intermediate term, sellers have been in control for several days now. I have marked the gap zone above from 56.50 to 52.75. I've marked it as 52.50, but I suggest you mark that gap zone above. It'll come into play at some point. This is an unauctioned area right above the CHVN. And then the market basically settled into an old LVN zone from early June. This area has been tested before, but it was an area that we pushed through very quickly on June's non-farm payroll, and we ended up settling down here. But so you could see that this is a trend type profile with a lot of rotation. We built a lot of big thick areas in here yesterday, really strong volume, but we did end up with a point of control that is at the low of the range with a poor low. Look at that low. When I pull up that low, 10,205 traded at the next to lowest price. That's a lot. Compared to the lowest price, we have a big step down. That is a poor low, and the expectation with the point of control being down here for it to just continue to flush lower, and that's what it did overnight to 1910.50. You can see I have here marked on the 2nd of June 1911.50 as a minor LVN left behind that day. 1675 is the key LVN, CLVN in this area, composite LVN in this area. You can see the dip here in the profile. So I'm looking for a test of that at some point today. We are trading just outside of yesterday's range. It's at 1921. So the market is operating with a lid on it. Now remember, the reaction on non-farm payroll was to go higher, was to spike higher. In fact, I have not seen the market move that well on non-farm payroll in quite a while. As I said, the profile type is a trend day profile. With some pretty deeply auctioned areas, multiple distribution profile. We have a lot of distributions here. You have a key LVN here, a small one there. Just a lot of artifacts left behind from yesterday that we will likely revisit. And we have a lower point of control, lower value, lower low, lower high. The trend, as I said, the intermediate to short-term trend is lower. Not sure why it's not holding on to this. So overall, yesterday we moved from the upper balance zone that we've been working with a 71/4 point of control and in a secondary point of control at 67.75. We have gapped and we have moved out of that balance zone and through the next balance zone down. I suggest you keep an eye on this balance zone's profile levels, the low volume nodes and so on. They're probably going to come into play. Yesterday was definitely an outstanding day. 29.25 points on the day session. As you can see, we have not had a day with that kind of volume till way back in April 15th. Volume was pretty high, 2.34 for non-rollover. That's about twice the norm. So this market is definitely meaning business on the sell side right now. Okay, today the primary expectation is for the market to probably open as an open auction out of range again. The selling is there, but the delta yesterday, look at yesterday's delta as the market sold off. So you have these big rotations, 8-point rotation, and you have a pretty good range on that 8-point rotation, 36.50 all the way up to 52.75. Yet unusually, the delta is contested. So as this is falling down, there are buyers still lifting the offer as others are hitting the bid. So we do have a negative delta here down to 29,000. But normally, in prior days, if we see a move that big, we would normally see, this is about a 16-point range at this point on the sell side. We would see this lower into the 38, 39 thousand, negative 38, 39,000, maybe even in the 40s. But yesterday it tended to move back to zero very quickly. So this is unusual because we've been reacting much better on the sell side than the buy side in the past, and here it is. It moves all the way down to 36.50, makes a lower low, and then pushes back up towards the 36.50 area, and boom, the delta goes back to zero. Very, very odd. Very odd. So somebody was buying this at lower prices as it was coming down, or some group or whatever, seeing this as prices being cheap. And this is probably a pretty long-term player in here, seeing that the pullback, this pullback is just a pullback, is putting on a position by lifting the offer and negating some of this delta down, and then a lot of that was given up on the close. This looks like locals getting flushed out on the close here. Those who are buying on the way down to balance the books. Pretty good flush on the delta on the close. So the delta overall has been a very, very, I mean, it just tells you, it's not an indicator, it just tells you how much traded on the bid, which gives you a negative delta. So if one contract trades on the bid, it's a -1, versus how much was lifted on the offer. So somebody reaching across the market to lift the market on the offer, and that gives you a +1, and the delta is just the sum of those two. So if one contract gets lifted and another contract gets hit on the bid, your delta is 0, and it's basically measuring the aggressiveness of the participants in the market. And it's been very, very, I don't do delta divergences or whatever, I don't believe in that stuff, but I like to see where the delta is going, who is more aggressive. If the delta is falling, then sellers are more aggressive as they hit the bid more than the buyers are able to lift the offer. I hope that makes sense. For today, let's go look at the overnight session real quick. I'm sure you already know what it looks like. It tested the yesterday's range low on the open, so that's our opening swing low overnight, but was unable, even though it put in a poor high, was unable to exceed 30.75. It actually pushed through this first key LVN here next to the point of control, but was unable to get into the next distribution up, which would have targeted 38 even, before it found sellers, and it found these sellers right at the European Open. The European Open has been a seller pretty much every day for the last week, to push down to 1050. Pretty aggressive selling here into the overnight session. And then this is the non-farm payroll here. Very odd behavior, pushing from 1911 and a quarter all the way to 25, 25.50 being the last high. It stopped 2 ticks short, and then it pulled back to 18, which is 4 ticks higher than this low here at 17. And it went sideways. Put in a poor high here, 25, 25, 24 quarter, 24.50, expecting that to break. It did, 28.75, and then now the market's retesting that low, 18.18, expecting this to go lower now. We'll see what happens on the open. I know it's a lot of information, and I know a lot of talking, but there's a lot that's going on here. On the open, expecting an open auction out of range. There's an elevated risk of an open drive on the open. The market did react positively to a lower number, which is unusual, but expecting a strong reaction, a potentially strong reaction on the open. But we have the number at 15 minutes into the open and 25 minutes into the open, half hour into the open. So OTF might wait until that happens. So, but there's an elevated risk of an open drive. I would expect a reaction to back towards the 26.25 all the way up into this key LVN at 28.50. That's what I would expect. If none of that happens, then you have the same scenario as yesterday, where the market is unable to find the buyers, and then I would target 1900 below. There are quite a few artifacts. The initial target would be 1675, and I think that's what we're headed for. I think we're headed lower for the session, but we'll see. There's been quite a bit of selling over the last few sessions, so it might take a break. But it is non-farm payroll Friday, so the volatility is expected to continue. 1675 is the target, the first target below, and then the small LVS zone at 1906 and a 1900 century figure are the key areas below us. I'll leave you with that. I've used up a lot of your time. As always, it is Friday. It is Friday. Make sure that you do not risk more of your account than you have to. When you're wrong, it's much more important for you to get in touch with how you feel about being wrong, and using that as a cue to learn about yourself rather than sitting there and fighting the market as many people did yesterday. That's just a losing way to conduct yourself as a professional trader and to conduct trading as a business. It's just not. It's a lot like a grocer who insists that a certain product should be popular and keeps stacking the shelves and taking a hit on it because nobody wants it. You have to react to what the market's telling you, not what you think should happen. It's very, very important to come to terms with the fact that the market, the outcome of the next trade is unknown. It's unknowable to everybody, and the market will do what it has to do, and it's not there to steal your money or hit your stops. It's there to find buyers and sellers and get them to agree on value given the current conditions. So you're fighting something that cannot be fought. So it's Friday. Do not go into the weekend completely frustrated and upset about your trading, and just keep it under control. I'll talk to you soon. Stage 5 traders, 12 o'clock Central, we have our weekly webinar, Ask a Question webinar. The link will be in your email shortly. Take care.